Yo, what do YouTube? It's your boy Flex V. Please be sure to follow me on IG because in today's video, this is going to be part 2 of our candlestick portion of the course. Literally in the same exact spot, literally just cranked up another video. So let's get straight into it. In this video, we are going to be going over strength versus weakness. Okay, so first things first, I do want to touch on a candlestick. I don't want to say pattern, but maybe like a formation, maybe just a candlestick in general that you have to be on the lookout for. And this is going to be a doji. Okay, so whenever you have a candlestick that basically closes, like the body of the candlestick literally finishes within the middle part of both wicks, that's going to be what you call a doji, D-O-J-I, okay? Now, what does a doji mean? A doji simply means indecision, okay? And what do I mean by indecision? The market just doesn't know if it wants to continue to go up or it continues to go down. So let's say if you're in a trade, you're going up, and now you're starting to see dojis at a bit of resistance, okay? We're gonna go over that stuff you're going to go over that stuff later, but let's just say we happen to see a doji. That is a signal that the market is not quite sure if it wants to continue or if it wants to reverse. And whenever it comes down to you entering your trades, if you see a doji, that's a sign that maybe you want to take a step back, wait just a couple seconds, wait a couple minutes, and then wait for the market to give you a better setup, because the market is just at an indecisive state, okay? Now, the next candlestick that I want to go over is one that is the opposite of indecision. This is going to give you certainty. Now, me personally, I don't enter off this candlestick, but when I'm on higher time frames, I look for these type of candlesticks to basically show me, which direction the market wants to go. Where it's pretty difficult to predict what the market wants to do, but these candlesticks are basically footprints. What those footprints do, they tell a story of what the market is anticipating and going, okay? So the next candlestick formation that we want to go over, this is a 2 candlestick formation, and this is going to be an engulfing, okay? Now, when it comes down to an engulfing, not gonna lie, I've been struggling explaining this. I know what an engulfing is when I see it, but explaining it is totally different. So when it comes down to an engulfing, now the market, when the candles open up, it's moving to the right, okay? So if you have a candlestick like this, this is a green, this is a bullish doji, which is indecision. It could be red or green, doesn't matter. It's a doji, means indecision, doesn't matter the color. So we have another candlestick. This is a bearish gigantic candlestick. Now this gigantic candlestick is basically engulfing the previous candlestick. And why do I say it's engulfing the previous candlestick? Because if you are, say if you're this candlestick right here, and this candlestick is standing next to you, like right in front of you basically. If you look to the right, you're not able to see anything because this candlestick is blocking you. So that's an engulfing. Now, if we have a candlestick something like this, if I look to the right, I can see, okay, I'm able to see through that. There's nobody that is blocking me, so I'm able to see. So that's the difference between an engulfing versus just a regular candlestick that's just in the way. An engulfing, that means you're not able to see past the current candle. The previous candle, you're not able to see past the current candle. And what an engulfing basically means is, depending on if it's a bullish or a bearish engulfing, in this case, I'm going to give it the example for a bearish engulfing. That means that the sellers are basically in control. Now, everything when it comes down to trading matters about where you are. So you need to be able to put the pieces together. It's almost like a puzzle. So if I'm in a bullish trend and I see a bearish engulfing, I'm gonna be a bit hesitant because I'm trending up, but at the same time I have this bearish engulfing. So that doesn't tell me to sell. That tells me, okay, maybe it wants to be a pullback. Maybe the market wants to go a little bit lower before bouncing back up. Now, if I'm in a bearish trend and we have something like this, oh wow. So if I'm in a bearish trend and I have something moving like this, and then I get an engulfing in this area right here, that basically tells me, okay, the sellers are in control. So now I can look for the market to continue to go down if I'm looking at a bearish engulfing, okay? So if I'm in an uptrend, boom, 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 and I see a bearish engulfing here, I'm gonna be a little bit hesitant. I'm not just gonna automatically take a sell because the market can easily just come down a little bit lower, maybe tap this, get some liquidity, whatever you want to call it, and then continue to go up. So when it comes down to your engulfings, you need to be very cautious. You need to be able to understand exactly what the market is telling you instead of just entering trades. You don't want to FOMO into a trade because and what the word FOMO means, that means fear of missing out. There's going to be millions, thousands, hundreds, there's going to be a lot of trades that you can take, so there's no reason to rush into a trade. Okay, so all right, last one. We are at 5 minutes. I'm trying to make this vid under 5 minutes, but we are pushing it, so I'm gonna try to make this vid under 10 minutes. Okay, so we have our doji candlestick, we have our engulfing candlestick, and now let's go over another important candlestick. And this candlestick right here is going to be what I like to call a rejection. All right, I'm not gonna lie, this video is gonna be a bit longer. Can't even lie to you. All right, so why is this a rejection? Okay, I'm gonna give you 5 seconds just to answer. Well, just say it out loud. 5, 4, 3, 2, 1. The correct answer is because there is a huge wick. Okay, it doesn't matter what time frame it's on. If there is a gigantic wick, if the body of the candlestick is if the wick of the candlestick is like more than double the size of the body of the candlestick, then you're probably looking at a rejection. And again, everything is subjective. Where is this rejection happening? Since this is a bullish rejection, which means that the market probably wants to go down, is this happening in a downtrend? Is it happening in an uptrend? You just have to ask yourself those questions before you make decisions, especially if you're going to make decisions with money on the line. Okay, now what does a rejection basically mean? A rejection, to me, that basically means that the market attempted to push up, and when you're trading in real time, right here, there's going to be a timer. Wherever the body of the candlestick is, there's going to be a timer counting down. Okay, so let's just say we're on the 5-minute time frame and there's like 2 minutes left. So let's say the market is up here. Okay, now if the market ends up closing down here, that basically means the candlestick ended up closing as a rejection. If the candlestick ended up closing up here, that's not a rejection because there's more body than there is wick. If it closed down here, there's more wick than it is body. So in my head, I'm going to say, okay, that's a rejection. Now, there's going to be plenty of rejecting candlesticks. There's going to be plenty of engulfing candlesticks, but it's really subjective because where are these happening? Okay, in future videos, we're going to go over exactly where we want to see these engulfings or rejections happening. But for right now, you just need to know that, okay, boom, this is a rejection. If the market did something like this, market did something like that, okay, boom, I'm not able to see past that candle because the body's in the way. Okay, boom, that's an engulfing. And if we have a candlestick like this right here, this is not really a doji, it's more of a pin bar. We're going to go over that in the next video. But whenever you see a candlestick like this is not a doji. You can take it as a bit of indecision, but just, all right, slow down, bro. You going too far ahead, bro. Take it easy. You tripping. I ain't gonna lie, you tripping. All right, so rejection, engulfing, doji. Okay, let's go over one more thing. This is going to be the last thing. We are at 8 minutes on the clock. So let me change this to green. And I'm going to show you how to tell when the market wants to continue going a certain direction, okay? Now, this area right here, this is going to be the body, where the candlestick ended up closing, and this is going to be the high of the candlestick. Okay, this is going to be the low of the candlestick, and this is going to be where the candlestick ended up opening. Okay, so boom, that candlestick is already done. It already printed, and whenever you hear the word candlestick printed, that means that the candlestick closed or onto a new candlestick. So this candlestick right here, let's say we have, okay, you can see on the side right here, it's 19 minutes. Okay, so let's say we have, basically this candlestick is fluctuating. It's literally right here, but then it ends up getting right here. Okay, so let's say the market ends up closing, this candlestick ends up closing, and it closes right above the high of the previous candlestick. So if this candlestick, and let me change the color so we don't get confused. if this candlestick ends up closing above, like if the body of this candlestick closes above the previous high, there is a strong chance that the market will continue to go up. Okay, so if you're looking to take buys, even if you're looking to take buys as it's breaking through, and if you see the candlestick close, that is a strong sign that the market is going to continue to go up. Now, if it closes something like this right here, be a bit hesitant. Not gonna lie, be a bit hesitant. Yes, the body of this candlestick did close pretty strong. It's not a rejection, but at the same time, I like to see when the body of the candlestick closes past the previous candlestick's high or low, depending on the circumstances. But let's say we get something like this. All right, if we get something like this, this is a rejection candlestick. This candlestick literally rejected the highs of that candlestick. It's possible that the market can keep going up. Everything is subjective when it comes down to trading, but at this end of the day, we don't want to look for, if we're already in a trade, we're looking to hold our trade to our next zone. Basically, if I see something like this, I make it out of the trade, because why did the candlestick literally push up, push past the high, and then end up rejecting? That's just something that'd be like, okay, let me slow down a bit, maybe go break even, or just get out of my trade if I'm up. Okay, now it doesn't really matter too much about the body. It just matters about kind of where the wick is, where the high of the candlestick, and vice versa for the bears. If this was a bearish or selling thing, we really want to see our candlesticks break past the previous. If this was a bearish, we want to see it break past the previous low, but since we're talking about bullish right now, we want to see it break past the previous high, and that's going to be a strong sign for continuation. And yeah, I think that can be it. Yeah, I think that could be it. So this video was basically the second part of candlesticks. This was strength versus weakness. We went over rejections, we went over dojis, we went over engulfings, and we also went over strength when it comes down to holding your trades or predicting if the market is going to continue. So hope you all enjoyed that video. Be sure to like, share, and of course subscribe. And I will see you all in the next video that I'm about to make right now.